Okay, so let's move on to M&A, Rumours and Movers.
Another done deal from the US announced late last night. Goldman Sachs, as ticker GS, is to buy GE's, ticker GE, online US deposits business. No financial terms were disclosed. Sources have suggested that the money that changed hands wasn't particularly material to either party. But it does mark the end of one era and the beginning of another. GE's been winding down its financial business recently, so its healthcare finance arm to Capital One, and this is all part of the wind down of GE Capital. That was a finance division that once made 50% of the conglomerate's profits, but almost brought it down completely in 2008 in the global financial crisis. So they're shutting it down. This is the last sale, and the rest of the assets now, I believe, are just going to be wound down. Why is this an interesting deal for Goldman Sachs? Well, it gives them access to $16 billion of deposits. Not a huge number, but they've been encouraged by the federal authorities to diversify their funding sources, and deposits are seen as a stable source of funding as opposed to market-driven funding sources, which, as we recall, or people with any kind of long memory will recall, was the problem that banks in the UK like Northern Rock found themselves facing in the crash, because no one was prepared to lend to them in the market. So if you've got customers with deposits, those deposits tend to stick with you, and that's a more ready and reliable source of funding. It's not the first thing that Goldman looked at in terms of buying a sort of public-facing bank. They did look at ING Direct a few years ago, but missed out, funnily enough, to Capital One. As I say, the Fed has basically pushed them in this direction to diversify their funding base. Well, they're also, interestingly, about to launch their own consumer loan business as well, which may or may not be a good thing, but we'll come on to that perhaps another time.